Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Monday, September 10th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. So today's pretty simple, folks. I mean, really what you're seeing today is a market that is going sideways, slightly lower. But really what it is, if you look at Friday's action and today, it's the market just holding sideways into the Wednesday announcement by the German banking side of things. We're going to hear, are they in favor of doing what is needed for the Eurobond buying that the ECB is going to do? Are they going to back bailouts and so forth? And that's going to be the big key. Then on Thursday, and that's Wednesday, then on Thursday, what you're going to see is the market react to the Federal Reserve. Many people are expecting QE3 to be announced, and again, that's going to be a major announcement. So Wednesday and Thursday are the big days this week. My guess is the market will go sideways for the most part until we get to Wednesday. That means today, kind of a flattish type day. Tomorrow, a kind of flattish type day as well. Now, there are pockets of action going on here. In fact, Apple's seeing some pretty heavy selling today. Take a look at Apple, guys. Apple's down about $12.36 right now, just off the lows of the day. That's a decent sell. Considering the markets are flat, Apple is seeing some good selling. Where are you going to look to buy Apple for a scalp intraday? The easy answer is right here. I mean, right here at around the 665 level. If you shoot down here, you'll have some support, some pretty good support. And then there's another level right here at around the 661 level. So 661 is your secondary level. Your first level is 665. And if this really were to sell hard this afternoon, you're looking at 657 as being a major, major level. But each of these you should get a bounce on the charts off of. All right, so again, for those of you that are traders intraday, those are your levels on Apple on the way down. And sort of in terms of a bounce, I wouldn't be buying it until you actually see one of these levels hit, and then you could probably play it for that bounce long. All right, taking a look at JP Morgan Chase. JPM is near the lows of the day. I like how JPM initially shot up this morning and then reversed. And since then, it's pretty much been a slow grind lower on the day. And interestingly enough, if you look at the daily chart, you can see JPM very, very extended. I mean, look at JPM the last few days of last week, really shot up. Same thing with Bank of America. So, I mean, these stocks are extended. And notice the pullback on BAC today after a 2-bar surge. You actually had a 3rd bar today when you were at the highs at 892. But then it just reversed and has come in. So financials are getting a little bit weaker. Honestly, I think what's going on is people are thinking, listen, we don't know what the Germans are going to say. We don't know what the Fed is for sure going to say. So we've had some big gains from last week. Take some money off the table and go into protective mode until we see more information. I think that's fair. I mean, that makes sense to me that if you had a lot of money in the market, you'd probably be thinking that way. Okay? Goldman Sachs also pulling back a little bit today. Look at this beautiful 3-bar surge. 1, 2, 3 bars on the daily chart of Goldman Sachs. In addition, look at this little pivot top right here. I mean, this is just a great, great level, guys. Take a trend line, draw it right across, and look at that. Pivot high right here going back to May 1st, 2012, and then we just double topped on Friday. So again, you shouldn't be shocked that Goldman is pulling back off of that level. It should not be a shock whatsoever. Amazon today down slightly. Amazon's had a beautiful run, finally broke through the 250 level. This is not a short. Even though it looks extended, in my opinion, it's not a short. We don't have PPT factors yet. PPT is the price pattern and time methodology we've derived here at InTheMoneyStocks.com, which will ultimately tell you the highest percentage trades, long or short, in a market or in a stock, in a commodity, currency, doesn't matter. Those are there, available when you want them. If you read and you know the methodology, which we teach you here, you can tell anything. You'll know it's a good long, good short, or a neutral, meaning don't do it at all. All right. Interestingly enough, today we saw some good gains on CLF. These are more coal stocks. The coal stocks have just been punished. A lot of short covering the last few days, and we saw these coal stocks really rip up. There's also talk about stimulus in China, which is obviously helping. China, a big user of coal, therefore stimulus would be a positive for them. All right. You can see A&R, same thing. I mean, A&R's had a beautiful move the last few days. Still low on the charts, but again, percentage-wise, the last 3 trading days or so has been a tremendous move on that stock. What else do we want to look at? Apple, Google down about 3.5. Baidu's up a little bit. Baidu's been punished lately, so I'm not surprised to see that trading up a little bit. Chevron, Exxon mixed. I don't see anything on those charts. Again, the markets are just so sideways here that this morning I think there were about 3 to 5 scalps in the intraday stock chat. This afternoon it's been a little bit quieter. Now 3 to 5 scalps is enough to make you a couple G's, so it's nothing to sneeze at. But in terms of volatility, you're just not getting it. I mean, today and Friday, the market, this is the daily chart, by the way, of the SPY. You can see you're into major resistance here. And if you go to your daily chart right here, a little bit of a bear flag, and you can just see from Friday's action across. I mean, you could literally take the low from the first candle on Friday and draw it across, and you haven't even been down that low. And then you could even take the highs here, and you're basically, that's your channel right there. You're just chopping up and down, up and down. So it just tells us that the markets are slow again, and the reason being is very simple. You're waiting to hear from the Germans on Wednesday and the Fed on Thursday. I think on Wednesday we start to get very volatile, most likely, and then Thursday as well. Should be even more volatile when we hear from the Fed. Will the Fed do QE3? Will they not do QE3? Will they do something in relation and try to force it? Do something in interim? Will they do nothing? How's the market going to react? These are all very, very specific keys that we'll have to watch, all right? Should be fun, though. I'll give you that. Should be very profitable as well if you're a member here at InTheMoneyStocks.com. Come join us at InTheMoneyStocks.com. Let's see what this market has going into the second half of this week. We'll trade it. We'll make money from it. Take care.